sector continues to improve in 2021. Now, speaking at the launch of the annual Supervision report, the Bank of Uganda officials are very, very optimistic, by the way, about a gradual recovery in economic activity despite the projected downturn in the global economy. Take a look.
As a regulator of the financial services industry, the Bank of Uganda has the mandate to produce the annual supervision report. However, in 2009, ensuring financial stability was also added to its mandate during the global financial crisis of 2008 and 2009. A fully-fledged financial stability department was also established in 2009 to strengthen macroprudential supervision and contribute to the bank's mission of fostering price stability and sound financial system.
Is anticipated and are beginning to see an increase in credit risk, an increase in the possibility of default by borrowers. When the borrower defaults, it's not so much the bank that suffers, it is potentially you and me. Now, as a regulator, my responsibility is to make sure that irrespective of the performance of the borrower, your money as a depositor will always be available to you as and when you need it. The way to do that is then to require the banks to hold more capital for larger balance sheets. So that's why you'll find, for example, some banks, like the biggest bank in this country has probably a capital of about 600 billion shillings. But then you look at their balance.
Speaking at the first Financial Stability Symposium, officials said that they are committed to ensuring transparency by communicating on and about financial stability matters.
Services. Secondly, Bank of Uganda regulates and supervises individual financial institutions and payment systems. And Dr. Twine highlighted this in his presentation. We go into financial institutions and do on-site inspections to ensure that each institution is complying with the regulations, including capital and liquidity. Now, in your assessment and in your evaluation of our presentations today, you need to take both of these into account, because one without the other will not ensure financial stability. I'll provide you some examples.
The annual supervision report 2021 indicates that the banking industry resilience continued to improve during the year ended 2021, supported by gradual recovery in the economic activity following the COVID-19 pandemic. However, down risks to financial sector performance and stability remain, mainly attributed to weaker than expected domestic and global economic growth.
Financial stability assessment in the report. So banking sector resilience has continued to improve and did improve during the year ending December 2021. But it was supported by a number of developments therein. One, we noticed a gradual recovery in economic activity. We also observed the significant capital and liquidity buffers that the financial institutions were holding, mainly as a hedge against the COVID pandemic, but also because there was significant amount of uncertainty about how long it was going to last, or even what the effects would be post the end of the crisis.
The annual supervision report 2021 further points to the high risk of capital flow reversals as interest rates rise in advanced economies, as well as inflationary pressures from structural impediments to global supply chains and geopolitical tensions. However, systematic risk in the banking sector remained moderate, supported by the reopening of the economy. Liquidity conditions also improved, supported by increased deposit mobilization and highly liquid assets. Pedson Mumbere, Smart 24 TV, Business Today.
The financial sector performance is weaker than expected, according to the banking supervision report that was revealed yesterday. And amid the serious economic challenges, the resilience of the banking sector has continued to improve quite slightly, and it did improve in 2021, but now quite weaker than the projected one. Then the Bank of Uganda officials are still optimistic about a gradual recovery in economy activity, despite the projected downturn in the global economy. Even with the crisis globally, they still feel at least there will be change in a way or two, in a way of doing certain things here in that particular aspect of doing business. Now, so with the banking supervision report is actually following up on the financial institutions and how most of these particular things are ongoing and how most of them are being implemented and what things are the banking institutions doing and is it actually bringing in the money or not. Now, away from that, with the SMB International updates, we were mentioning something to do with the World Bank releasing a prospects report. Now here, from the updates again, we bring it back as the effects of high inflation are meant and are likely to at least be felt on by the poor. In his State of the Nation address, President Yoweri Museveni painted a rather glossy picture of the country's economy. And he also mentioned that we're now into the middle income status as a country. However, on the same day, the World Bank also released its global economy prospects report, whose version of the situation is not as rosy as what the president had to reveal. Check a look.
Coming on the heels of the raging pandemic and the right in the middle of the ongoing war in Ukraine, the Global Prospects report shows that the slowdown in the global economy raises the risk of stagflation, an economic situation whereby prices keep on rising but economic activity remains stagnant, and whose their effects were last witnessed in the 1970s. The report shows that following a rebound of 4.2% in 2021, growth in sub-Saharan Africa has weakened in 2022 as domestic price pressures, partly induced by supply disruptions, are reducing food affordability and real incomes, especially in the low-income countries like Uganda that are reliant on wheat imports from Russia and Ukraine. Uganda's economic growth slumped from the pre-COVID-19 level of 6.4% to just 3.7% in 2022, much lower than that of Rwanda, Kenya and Tanzania. The World Bank President David Malpass says that because of the resultant supply chain disruptions, a recession will be hard to avoid. The report notes that there is need for a decisive policy action at both global and national levels, which will involve efforts to cushion the blow from surging oil and food prices, to speed up debt relief and expand vaccinations in low-income countries. The report warns that this would deepen poverty, with price inflation and food shortages taking a particularly severe toll on vulnerable populations. Consequently, the resultant food insecurity and rapid increases in living costs could lead to an escalation of social unrest. But whereas some analysts have recommended government action in the form of subsidies to cushion the population, the World Bank warns that these policies would be distortionary. It instead recommends that governments would need to reprioritize spending towards targeted relief for vulnerable populations. Ayan Kos, the director of the World Bank's Prospects Group, warns that developing economies will have to balance the need to ensure fiscal sustainability with the need to mitigate the effects of the overlapping crisis on the poorest citizens. Barija Andrew, Smart 24.
All right, now, in his State of the Nation address, like you mentioned, President Museveni did reveal that the economy is steadily moving, and we should congratulate us for being into the middle-income status economies. Surprisingly, however, though, is that the World Bank report was different from that one, the Prospects report of 2022. And regardless of the situation that is actually coming on board, is that the eye effects of high inflation are on the poor, and this time around we are, as Uganda, being considered as one of those developing economies, we're expected to at least feel the pinch later on in the situation. But with the prospects of 2022, it's just a projection, by the way. It's just an estimation, apparently due to the factors of the economy and looking at the different factors that affect the value chain, that affect the entire production cycle, is what makes that brings upon this particular prospects report from the World Bank, and that is how we get into situations of such discussions. But then, if you were to look at how Uganda is actually moving, you would want to say it is in most cases, in regards to the prices and the economic status of the country, it's not only us who are feeling the pinch this time around. Countries like Kenya, Just recently, yesterday, we were mentioning about how Kenya put a subsidy, has actually so far used 7.6 billion Kenyan shillings on in fuel subsidy. If I'm to get it right, I would want to actually at least give you this particular, yes, it was 7.65 in monthly fuel subsidy. That is Kenya. And you can see how different countries are trying to mitigate situations. Tanzania, just a few weeks back, had to reduce taxes on fuel, and later on, prices of fuel had to go low to at least make it easier for the people. But that in Tanzania is for a period of only June until the government studies the situation. Now, Uganda though, if you look at the price of petrol shooting to 5,800, then we've got that of diesel, which is actually shooting to 5,700. Depends on the fuel station that you're actually using. But then we've got to see different prices of commodities hiking. We've got to see different prices, let's say food prices and all those hiking differently. And we are feeling the pinch. Cost of living is very high. We can all agree that you can imagine being in an economy whereby the cost of living is high, but then your salary is not increasing. So you're not having money with you, but okay, you're having money with you, but then you have to pay more for the things that you used to find at a cheaper. So that means you have to adjust. But how are you going to adjust when you're not getting that money? So that is the situation that we are currently in situation. But next week, we shall be presenting, the Ministry of Finance will be presenting the national budget to the Ugandans. It's a 48.1 trillion shilling budget. 9 trillion, though, was borrowed to at least fund the budget, these different allocations in terms of the national budget framework paper. And in that particular one, we're still trying to fight the issue of the public debt, and which is actually rising and hitting us. Our inflation already hit the mark of 5%. Now we're into 6.1%. So you can see how different situation. We're in a crisis that is worrying. The country is in a worrying state. But however, the hopes are supposed to be there. We're supposed to be very optimistic each other day that passes by, because it's the hope that always provides room for at least change. However much they would say, it is the hope that kills you, but it's the hope that builds you as well. Okay, and with only 5 minutes to the top hour mark, I will definitely be heading into a break. When I do return, I've got some New Vision and Daily Monitor here, and we're going to go into the press review. But also, we have the SMB no comment. This time around, I've got two ministers on the check. One is Dr. Jane Ruth Cheng, Minister of Health. She was commenting something to do with the national budget allocations to the ministry, and then Minister Passes Namuganza says otherwise. What does she say in regards to the housing sector? She says they did not allocate nothing to that sector. I'm telling you, it's a different twist when it comes to the national budget allocations. Everyone has got their opinion. Everyone has their own view. And that is so with the SMB no comment. We're just giving you a review of the national budget as we wait for it. All ministers have their own say. Just imagine you're a minister from a sector. Just recently in the month of March, when we were celebrating Women's Day, by the way, I do remember the Minister for Gender and Social Development was saying her sector receives less funds, and it is a very, very, very influential sector in Uganda's economy. I'm telling you, everyone wants to have allocation, but the health minister does believe they've been prioritizing them, and she says even this time around they've prioritized. So those are some of the things that are coming up after the break. Stick around. I have the press review and the SMB no comment. Good morning.